Namaste, dear friends. Welcome to our channel. Today we're journeying into the world of finance, exploring a topic that plays a vital role in our lives: loans. Loans, in essence, are a form of financial lending, a tool that enables us to achieve our dreams, be it owning a house, a car, or even funding our education. They entail the transfer of money from one party, typically a financial institution, to another, which is us, the borrowers. But this is not a one-way street. In return, we agree to repay the borrowed amount, usually with a bit of extra. That extra is known as interest. Now, you might be wondering, why are loans so important? Well, loans play a significant role in our financial planning. They allow us to make large purchases that we might not be able to afford outright, spreading the cost over a period of time. They can provide a financial lifeline in times of need, and if managed well, they can even help us build a solid credit history. But before you jump into the world of borrowing, it's crucial to understand the different types of loans available. From mortgage loans for your dream home to personal loans for that much-needed vacation, each type of loan has its own terms and conditions, and understanding them can help you make an informed decision. In our upcoming segments, we'll delve deeper into these types and also discuss how the world of loans differs for the rich and the poor in India. If you're finding this content helpful, do consider subscribing to our channel and sharing this video with your friends and family. It's time to demystify the world of finance, one loan at a time. So buckle up as we take you on a journey to better understand loans in India. In India, loans come in various shapes and sizes. Let's dive in to understand them better. The lending landscape in India is vast and varied, catering to the diverse financial needs of its people. One such financial tool is the personal loan. Personal loans are unsecured loans that you can use for any purpose, from funding a dream vacation to meeting medical emergencies. They are typically characterized by higher interest rates due to their unsecured nature, but the flexibility they offer is unparalleled. Next, we have home loans designed specifically for those looking to purchase or construct a house. These loans usually come with lower interest rates thanks to the collateral involved, the property itself. Moreover, the repayment period for home loans can extend up to 30 years, making them a popular choice for long-term financing. Car loans, on the other hand, are a type of secured loan used to purchase automobiles. These loans typically have shorter repayment periods compared to home loans, and the vehicle serves as the collateral. Moving on, education loans are a boon for students aspiring to pursue higher studies in India or abroad. These loans cover tuition fees, living expenses, and other related costs, enabling students to focus on their education without financial worry. The repayment usually starts once the course is completed, providing students with time to secure a job and become financially stable. In addition to these, there are also gold loans, where gold articles are used as collateral, and agricultural loans designed to support farmers and promote agricultural activities. Each loan type comes with its own set of terms and conditions, and it's essential to understand these before signing on the dotted line. In a nutshell, the Indian loan market is diverse, catering to a wide range of needs. Whether you need funds for immediate personal use, buying a home or a car, pursuing higher education, or even for farming activities, there's a loan out there for you. Remember, choosing the right type of loan could save you a lot of money and stress. Loans aren't just for the rich, they're for everyone. Let's see how they differ for rich and poor individuals. In the world of finance, the terms of a loan, including the interest rates and eligibility criteria, often hinge on the borrower's financial status. It's a bit like a seesaw. On one side, we have the rich, those with substantial incomes, substantial assets, and a stellar credit history. They have a plethora of loan options to choose from and can often secure loans with lower interest rates. Why? Well, they pose less of a financial risk to lenders. On the other side of the seesaw, we have borrowers from low-income groups. These individuals may find it more challenging to secure a loan, and when they do, the interest rates can be higher. But don't let this discourage you. India's financial landscape is dotted with several government schemes designed to help low-income borrowers. For instance, there are subsidized loans with favorable terms. These loans are designed to ease the financial burden on those less fortunate, making it possible for them to secure a loan without being crushed under high interest rates. Eligibility criteria for these subsidized loans often consider factors beyond just income. They may look at the borrower's occupation, location, and even the purpose of the loan. For example, Loans for agricultural or educational purposes often come with special subsidies. There's also a range of microfinance institutions and self-help groups that provide small loans to those in need, especially in rural areas. These organizations often offer loans with more forgiving terms and conditions, helping to bridge the financial gap. And let's not forget about concessional loans. These are loans that come with generous terms, such as lower interest rates or longer repayment periods, making them more accessible to those with lower incomes. So, whether you're a tycoon with a thriving business or a hardworking farmer in a rural village, rest assured that there's a loan out there for you. The key is to understand your options, assess your needs, and choose a loan that aligns with your financial capabilities. So, whether you're rich or poor, there's a loan out there that's just right for you. Loans can be a boon, but they can also lead to financial stress if not managed wisely. Let's dive into the concept of responsible borrowing. Loans are not free money. They are a financial responsibility that we enter into, promising to repay the borrowed amount along with interest. So how do we ensure that we borrow responsibly? Firstly, borrow only what you need. It's tempting to borrow a larger sum when lenders offer it, but remember, the more you borrow, the more you'll have to repay with interest. Keep your borrowing in line with your repayment capacity. Next, timely repayments are key. When you repay your loans on time, you're not just avoiding late fees and higher interest, but you're also building your credit score. A good credit score can open up doors to better borrowing terms in the future. Speaking of credit scores, let's understand their importance. A credit score is a measure of your credit worthiness, and lenders use this to decide whether to approve your loan application. Maintaining a good credit score is essential for responsible borrowing, so make sure to pay your bills on time. Don't max out your credit cards, and keep your debt levels under control. Avoiding debt traps is another crucial aspect of responsible borrowing. A debt trap is a situation where a borrower is unable to repay the debt and continues to borrow to pay off previous loans, leading to a cycle of debt. To avoid this, have a clear repayment plan in place before you borrow and stick to it. And finally, always read the fine print. Understand the terms and conditions of your loan, including the interest rate, repayment schedule, and any penalties for late payment or prepayment. Remember, loans are tools to help you achieve your dreams, not to put you in financial distress. So borrow wisely, repay promptly, and maintain your financial health. We've covered a lot of ground today, haven't we? We've journeyed together through the intricate world of loans in India, exploring its various types and understanding how they cater differently to the rich and the poor. We delved into the significance of responsible borrowing, highlighting the importance of understanding loans fully before signing on that dotted line. Remember, knowledge is power, particularly when it comes to financial affairs. A well-informed decision can make a world of difference, protecting you from predatory practices and unnecessary financial burdens. Loans, when used judiciously, can be a powerful tool to help you achieve your dreams, whether it be owning a home, starting a business, or pursuing higher education. So, equip yourself with the right information and approach loans with caution and understanding. And remember, we are here to help guide you on this journey. Thank you for joining us today. If you found this video helpful, please like, share, and subscribe to our channel. Until next time, Dhanyavad, and stay financially savvy.